Hey everyone, welcome back to your channel name. Today we're diving into Enbridge Inc., the Canadian energy giant, with shares around $48. Can it hit $1,000? Pros, cons, dividends, and outlook all in this deep dive. Let's get started. Enbridge is a midstream powerhouse transporting oil and gas across North America. Its historical 14% compound annual growth since 1984 is impressive. Hitting $1,000 is a 20x jump, highly unlikely in the near term. That said, it's a dividend beast, attractive for steady income investors. High debt and the energy transition cap upside, balancing steady cash flows and risk. Pros: stable fee-based revenues provide predictable cash flow, diversification into renewables adds future growth potential, and a juicy tilde 5.7% dividend yield. Cons: heavy debt, roughly $101 billion and regulatory risks. Compared to TC Energy and Kinder Morgan, margins are similar but Enbridge carries more leverage. Profit margins around 10% now, down from about 12.7% last year. Typical 1-3% fluctuation. Debt sits high, roughly a 148% debt-to-equity ratio, but pipeline cash flow, about $13 billion, helps service that debt. Gas utilities and renewables add 25-30% of revenue, boosting diversification. Overall financials point to steady cash but higher leverage risk. Since the 1984 IPO, long-term returns with reinvested dividends have been exceptional. For example, $1,000 could have become about $243,000. Looking ahead, Enbridge plans roughly $29 billion in projects toward 2030 and beyond. Targets include net zero by 2050 and hydrogen focus, plus demand tailwinds from data centers and AI infrastructure. Risks remain. Climate policy, protests and permitting can delay or cancel projects. Enbridge has approximately 30 years of dividend increases. A dividend aristocrat type. 2025 hike around 3%, yield tilde 5.7%. Payout sits near 65% of distributable cash flow, generally sustainable. Expect roughly 10-15% near-term total returns, 8-12% long-term income focused. It lags the S&P long-term but beats the TSX for income and offers stability versus some global indexes. So, Enbridge is a solid dividend pick for income investors, but watch the high debt and energy transition risks. It's not hitting $1,000 anytime soon. Like and subscribe for more breakdowns. Comment below if you're buying ENB. Not financial advice.